Good afternoon, traders. It's almost 12 o'clock on Tuesday, and I just got long these frozen concentrated orange juice futures. Average price of 110.85. Only one contract, but you see it's very volatile, and we're up 262 already on this. Well, just a quick update. I'm still studying for my test, and I haven't been able to trade as much as I'd like. I'm continuously watching the markets, trading options and stuff, but it's really hard to get in a day trade. What I've been doing, and it's been working for me, and it's at least been providing me some income while I am studying for this test, is I've been shorting strangles, and currently I'm in GLD. Now, this is somewhat of a risky strategy, especially in the equity markets, because an analyst could come out, they could say something bad about a stock, the stock could tank, or they could come out with earnings, maybe you didn't know about it, they could surprise you with a dividend. There's a lot of things that could go wrong, but if you focus on stocks that don't move a lot, Ford, Triple M, stocks like that, utility companies, you can make a decent living trading this strategy. So what I did for the GLD, and I'll show you my position in a moment, is I shorted the 154 call, and I bought the 151, and I shorted the 151 put. So what I'm saying is, if we hold in this range right here, I profit whatever I shorted it at if it expires on Friday, since they are weekly contracts. If we hold in here, as of right now, if I closed out this position, then my profit would be $340. Briefly looking at the NASDAQ futures. What we see is a multi-day correction, but that's after we had the huge move last week. After Ben Bernanke came out, hinted at more stimulus, we held above the prior month's open, bounced off that, and continued up and pushed to a fresh new higher high. Now, sometimes this is where it gets a little tricky, where you have multiple tops forming and multiple higher lows, because it's extremely volatile, these markets. Now, say we were just trending up and they were more shallow dips and rips, then you can make a case that this next dip is probably going to be bought aggressively. Normally when you have big wicks on down bars, there's going to be some buying. As we saw yesterday, they bought the market up aggressively. And far more prevalent than not, the following day, there's usually an up candle. We had that this morning. A lot of traders thought that we were going to push up, close in the green, and that still could happen, even though we're a few points off lows. And then the following day, of course, was going to be another move up. And they were thinking that this level is going to hold somewhat. Right now, I'm sort of unbiased. If I had to pick a trade, a direction, I would be trading off levels. I wouldn't go in blindly and say, just because it's prevalent that we usually finish up, I'm going to long the position. That's not the case here. If you know me, I'm unbiased. Sometimes I'll give you my opinion what direction the market's going to go, but no matter what, I stay disciplined with my risk adjustments and I trade off levels. What I do know about this short-term rally is it took a lot of buying power to get this market up off this level. This move was a given, but this move right here, that was kind of a momentum trade. Risk was off and they started accumulating the contracts. Before I move on, one other scenario that could happen is, say they did buy it back up, get above 2600, there could be a rollover. And if we do see somewhat of a soft right shoulder, you could be able to, take advantage of the short side. Remember, keep the 5-period moving average on your level. It's been an indicator of the trend thus far. And if you have Thinkorswim, you could actually plot this on an intraday chart if that helps you keep track of it. Alright, next we're looking at crude. Alright, so Sunday evening I was actually short in the crude market. I made a couple points off that. It was a given. Ever since the month started, we were up 18% in this short move right here. Besides the fact that the people were saying, okay, now crude's breaking above 100 on the media. What's next for crude? It should go to 100. Now we see the correction. And I can't improvise enough how much the media plays an impact on the retail investors and the professional money. I'm not going to try to be a conspiracy theorist and say they work together, but if you look at my last video and I was recommending crude and I told you I was getting long for a move up to 100, I actually closed out of that position during this top when I took the opposite trade. I told you that the CNBC had articles and it was on for a full day. Crude's going to 60. Professional said it right when they get the retail investors short right here. That's when they go and move the market up and slam everybody. And during this move, all the retail investors that got short here are saying we're going to go back down. Then they bring it up, and eventually that they have to go ahead and buy their positions back. We see a short squeeze, short money comes in. Time and time again, you have to be somewhat cautious when listening to the media. I will watch CNBC sometimes just to find out the news, but I never take advice. And if I gave you advice, if Warren Buffett gave you advice and said, I'm buying this stock, you should go ahead and get in, it's a great value play, you should always do your own diligence. Do your own research, because his time horizon could be differently. It might take him a year to accumulate that position. So don't go off anything I say. Use your own strategy, traders. You don't ever want to piggyback off somebody and wait for them to make up their mind before you move into a position. Alright, I just sold out of my OJ. One contract, 322 profit. Just because I want to get back to trading, I'm going to eat my lunch and get back. I wanted to get somewhat of a video on for you. I haven't forgotten. If you have any questions about the market, go ahead and leave a comment, and periodically I'll get back to you and I'll help you out with that. Alright, good luck trading, and I'll talk to you next time.